Hello, viewers. You're welcome to this episode, lesson 14 on how to trade a bullish trend. All right, how to trade a bullish trend. We have so many series concerning how to become a forex trader. So, you do well to go to my YouTube channel, look for those materials, read them, study them, take notes so that you can start to trade on your own. All right. In today's lesson, I'm going to teach you guys on how to trade a bullish trend. I've already taught us in my previous videos what trend is all about. We have the bullish trend and we have the bearish trend. All right. Then you should know how to trade those trends. All right. It's not just all about knowing when a trend is trending. We say bullish when it's going up, when price of the commodity or currency is rising. All right. We say is bullish. When the price is dropping, we say is bearish. So, as a beginner, all right, or even if you've been trading for a very long time, all right, it's always good to trade with the trend. They will always say trend is our friend. Yes, you trade with the trend. What do I mean by that? When the price is rising, you just know that what you should be looking for is what? Buying opportunity, like I've explained to us before. And when the price of a commodity or a currency is dropping, what you should be looking for at that point is what? Selling opportunity. All right. So, and I've already showed us and I've already taught us how the signs that it a trend will give you that you know that okay, change of character is about to happen. When a trend is breaking structure to the upside, like this, a pullback break of structure to the upside, a pullback break of structure to the upside, we are saying is bullish, but by the time you now see a sign that is creating equal highs, double tops, triple tops, then head and shoulders, as I've already taught us in my previous video, you know that there is a sign of reversal. A bullish trend is now gradually turning to becoming a bearish trend. That means price has been rising all this while. Now you will now be experiencing, or it is a moment for what? Decrease in price. You now see price dropping. Then the trend will now be coming down like this. The trend will now be breaking structure to the downside. All right. So now, how do you trade bullish trend? All right. When I say bullish trend, I mean a trend that is going up. How do you trade it? That is what I'm going to teach us today. After today's lesson, you'll be able to trade a bullish trend successfully without having issues. All right. So now we know that a bullish trend simply means a trend that is going up, price that is rising. All right, price is rising, is going up. All right, we say it's bullish. Now, how do you now trade it? First, this you must allow price action to create what we call structure. I've told us that structure, knowing how to read structure, meaning that you'll be able to find your feet in the forex market. If you don't know how to read structure, you will always have problem. You always have difficulties because structure represents the character, the activities of both buyers and sellers in the market. So now, how do you now trade a bullish trend is what I'm about to explain to us. So you must allow structure to form first. That is number one. Number one, you allow structure formation. All right, allow structure formation. That is number one thing you must be patient. You have to be patient. Allow structure formation. All right, it's very, very important. You must allow structure formation. How do you do that? I will show us now. You see a structure, for a structure to form, it has to start from this low here, push it to create a high. At this point, you are not doing anything. You are not doing anything. Allow structure to form. At this point, has structure formed? No. It just created a high. Then once this push is exhausted, you now see what we call moment of relief. Moment of relief simply means there will be a bearish move. We call it correction. We call it retracement. We call it correction. We also call it retracement. All right. I will, you see, push like this. Then this leg that is coming down, we call it retracement. We call it a moment of relief. We call it correction. All right, whichever one you want to take inside, those are the terminology. Once you see, you call it also a pullback. All right, don't worry, I will list everything for you guys. You see, allow the structure, allow price action. Once there's a push to the upside, it has created a high. We call it swing high. All right. Then you allow a moment of relief to happen. This point now, you are not doing anything. You are just watching structure, watching the activities of what? Buyers and the sellers to play out before you know when to take action. It has created a high. That is fine. Then, even if you see price action pushing up, allow it to go. It will get to a point, it will get exhausted. I beg your pardon. It will get exhausted. That means it will now lack that power to continue to push to the upside. It then will say it has created a high. Once the high is created, you will see a moment of relief, a pullback, retracement, or correctionary move. Price will come like this, then stop here. It will not go below this point where it started. If it does, meaning that it's no longer a bullish trend. The rules of order flow, meaning that as the trend is going up, if there is any correctionary move, it will not take out this low. Price will store somewhere here, then it will reverse, then break this structure to the upside. Once this happens, after this correctionary move, retracement pullback is completed, then price action will now push, the price will rise again, meaning that this price rose from here to this point, all right, went down again, there was a decrease of price. Now the price will rise again to go above this high, this previous high. And once that happens, we say a bullish trend is established. Why? Because it created a push to the upside, it created a high, then there was a retracement. This is not, the structure is not completed yet. Then by the time price now broke this high, we say the cycle of structure creation is completed, or rather is complete. It has broken the structure to the upside. Now we now have a bullish trend. This is a bullish structure. From this low, it created a high. There was a correctionary movement to the downside, but it did not take out this low. It now broke structure to the upside. All right. Once this is once this happens, all right, we now say that it has broken structure. Now it has broken structure, it created another high, meaning that this high is no longer valid. This is the current high. This is the previous high. This is now the current high. All right. Then after that, you see another push to the downside, correctionary movement or pullback, or we call it retracement. Then price will rise again. But I told us any time, at any point in time, you see that there's a correctionary movement that now broke this structure below, that now violate this low. You just watch out, you know that the trend is about to change. I hope I'm making sense. I don't want us to struggle with it at all. Now that he has created a low again, the next thing you should see is for price to take off and break this high. All right. This is a cycle that will continue and will say bullish trend. Now, how do you trade it? Very, very important. And this is the reason why I am teaching this topic today. Price took off from here, created a high. Now that there is a retracement, you have to prepare yourself, prepare yourself to get involved in the market from this level. Why? Because this is the origin that caused this, that dished out this buy. All right? This is the origin that will ditch out this buy. Once there's a retracement, or you call it a pullback, say retracement. You can call it pullback. Just simple call it pullback or a retracement, whichever one you see. Anytime you see a retracement, you see the word retracement is the same thing. Anytime you see the word pullback, is the same thing. All right. Once you see a pullback, all right, you now wait for it to get. We wait for the move to get exhausted because sometimes, as is experiencing this moment of relief or pullback, it can push below this place and break and violate this low. And once the low is violated, you know that the trend is about to change. That is why you need to be patient for you to wait and see whether the price will stop here or it will go below this low. All right, below this low. Anytime you see price break below, if it breaks below this low, this very low, if it breaks below this very low, you just know that trend is about to change. So once you see this push to the downside, a pullback, you wait here, all right? Once it gets to this point, all you need to do is to wait for what? A bullish candle. You wait for a bullish candle here. Once a bullish candle, because it has been bearish, a bearish candle is what you'll be seeing here. But once it now gets here, the last bull bearish candle, you will now see what we call a doji candle. After the last bearish candle, you see a doji candle. All right, you see a doji candle. A doji candle, it's a sign of what? Indecision. You see a doji candle. You see a doji candle. A doji candle is a sign of indecision. It's a sign of indecision. All right. Honestly, before this, you will see bearish candle first. You now see doji. And once you see a doji candle, the next candle you will see is what? Bullish candle. Once you see a bullish candle, you enter.